Hello and welcome to Trading 5 Talents. In today's video, I just want to give a quick improvement to the Iron Condor strategy, and this is going to be the 10-1-7 Iron Condor strategy. Now, this adjustment with this iteration is really going to keep the same risk to reward ratio as the 10-3-7, but it's going to slightly increase the returns based on my previous version, which was the 10-3-7. So what I found before when I was doing the 5 delta strategies, the 5-3-2 and the 5-1-2 strategy, was that if you reduce the widths of the wings of the Iron Condor and you just sell 3 times as many, so you're using the same amount as collateral, then you can actually increase the returns and keeping the risk the same. So I wanted to do that with this one to see how it worked out. So we're still looking for a 10 delta on the short strikes, but this time we're only going to go 1 strike out wide with the long options. So that's the 10-1-7. So we're still entering Monday, Wednesday, and Fridays, but we're going to go out 7 days until expiration, just like the 10-3-7. And we're looking to get approximately 16 cents or $16 in credit when we sell these. And then we're going to be exiting early. So we're going to exit at 75% of the max profit. And that way we can avoid any type of, not assignment risk, but any early closure if you're using Robinhood. So this is why it's called the 10-1-7 Iron Condor strategy. So once again, the profitability is going to be the same. The chance of profit is going to be the same, which is approximately 80%. Now, that does have a caveat because 80% refers to us holding the Iron Condor until expiration. But since we're going to be exiting early, either because we were closed out early by Robinhood or because we hit our profit target, that is going to change. And whether it goes up or down, I'm not exactly sure. That's why I'm doing these tests. But otherwise, if we held it to expiration, it still has an 80% chance of profit. So the profits are going to be around $12 per Iron Condor. So if we enter for 16 and then we exit when it's 75% of that max profit, we're going to be exiting around 4 cents. Because this is only a 1 strike wide strategy, it only requires $100 per Iron Condor. So this is going to give us approximately 16% return on capital, which is higher than the 10-3-7. But again, the same risk. So once again, small consistent profits, as with many Iron Condor strategies, and we'll also never look to take that potential max loss, which would be the $100 minus the 16. So we're never looking to take an $84 loss per Iron Condor. We're actually going to take a loss once the underline hits the short strike of the Iron Condor on either side. So that's when, in this case, SPY. When SPY touches one of the short strikes, then that's when we would exit. So we determine, or at least I was determining that loss using option strat, and I've already had several videos on that. So you can check out a previous introductory video of these IC strategies, and you'll see how I'm calculating that actual max loss. So when are we exiting this strategy? Well, once again, exiting at 75% max profit, that is our target. It reduces the auto close risk. Now, there's still a chance that it could auto close because we're not able to exit once it gets to 75% max profit, or maybe we're at 70 and Robinhood still thinks there's an assignment risk, so it may close out early. But one thing I do want to note is that with Robinhood, as you can see here, that they have extended reduced the time in which they're going to now auto close your spreads. So instead of 1 hour before market close, it's now only 30 minutes before market close. So that gives you a little bit more time for the underlying to move in your direction and not get closed out too early. So by exiting early, we hope to increase the win rate. And because we're exiting early, we're not holding through expiration. We're going to need to enter the next Iron Condor before this current one, not expires, but the current one is closed. So obviously that requires more capital. The other time we would exit is if it's going to be a loss. And again, we're calculating that loss when the underlying price touches one of the short strikes, either on the put side or on the call side. So what I've been finding is that the actual max loss is about $34 per iron condor. So we could either be making $12 or we could be losing $34. So that's still about a 3-to-1 risk to reward ratio, which is very similar to what we were finding in the 10-3-7 iron condor strategy. So we're increasing our profitability a little bit while keeping the risk the same. So is this strategy actually better? Well, the advantages are going to be the same as all the other iron condor strategies. Still a very high chance of profit with consistent winners. We're going to have a higher return on risk trade for this particular iteration. And once again, only one ticker to track. This is the SPY. Trying to exit early to reduce the auto close risk and hopefully increase our win rate. But the disadvantages is going to be with commissions. And so this is always a big one if you're not using Robinhood or any other broker that offers free commissions on options trading, because the widths are narrower. You have to scale up, which means you're purchasing or you're selling more contracts to open and you're buying more contracts to close. So those commissions are really going to eat in on your profits. Once again, with any iron condor, it's a neutral strategy. So any binary events, black swan events, that could really result in some heavy losses if you experience those. So with all of these strategies I've been testing so far, I've been just, I've entered them sequentially and I haven't avoided any binary events, even though we've had a lot these past several weeks. I just want to see how they perform in this really volatile environment. So that's why I've been doing it sequentially. And I know I get a lot of comments about, avoiding these events, and I should, but I want to test the strategy to see how robust it is with all of these events. In future iterations, I am going to be modifying these strategies slightly while at the same time avoiding these events to see if we can't become more profitable by doing that. So it does require more capital with a 10-1-7 strategy because of the overlapping iron condor positions, because we're exiting early, as well as scaling up to match the 10-3-7 version. And then finally, disadvantage is I've noticed that when you try to close out an iron condor, especially when it's below 5 cents, at least this has been my experience, you don't always get filled. And so if we're closing out around 4 cents, getting it filled might be a little bit difficult. So that is one thing that I'm going to keep an eye out for when I'm doing this testing, but that is something I have noticed so far. So if you want to keep up to date with these results, which I should be posting soon, then go ahead and click on the subscribe button and turn on the notifications. If you have any questions about this one, then go ahead and leave a comment down below and I'll get back to you as soon as I can. Until next time, trade wisely and take care.